Well, the OECD is pretty confident, given what we've been hearing here, particularly just in recent days about Michelle Bullock sounding as though she's confident that, without actually directly saying it, that Australia's economy is resilient, borrowers are ready to maybe withstand more, and that people are doing just fine. But the OECD, the Paris-based think tank, saying that the RBA's cash rate's probably peaked at 4.35%. It'll probably stay there for a while until inflation noticeably starts falling. We saw the monthly inflation update for October yesterday, showing that inflation's come down to 4.9%. Still high, but it's falling. It's still well above the Reserve Bank's target band. But the OECD now thinks that once inflation starts falling, getting back towards that 2 to 3% target band, the RBA might be stepping in with interest rate cuts of 3/4 of a percentage point starting in late 2024. So that will be much relief for borrowers. And it's all about inflation. Matthias Cormann, the former Australian Finance Minister, now Secretary General of the OECD, thinks global inflation in advanced economies will probably be getting back to what's normal by the end of 2025, and he was pretty optimistic, and here's a bit of what he had to say in Paris overnight.
The global economy has shown real resilience. In the first half of this year, the rate of global growth was back close to the pre-pandemic average. Inflation, even if still too high, has come down from last year's peaks.
So Matthias Cormann there, we've got good news on inflation, but how concerned is the OECD about the federal government's lack of commitment on major economic changes?
Yeah, and there, just briefly on Matthias Cormann, one of the other things he was saying was that he doesn't think there's going to be a global recession, which means Australia will once again sidestep a recession. But going to your question, the OECD is saying that Australia has some pretty big economic challenges, for example, in terms of reforms. One is further reining in tax breaks on superannuation, and we know that legislation is going to be introduced to Parliament to cut some of those tax breaks for wealthy retirees who've been using the tax breaks in the system. The other one is a very hot political issue, potentially politically toxic. Governments don't really want to touch it, but it's the GST, the goods and services tax. The OECD is saying that the level should be hiked and the base should be broadened, and this is to cover the ageing population, but also covering the cost of the very expensive climate transition. Jim Chalmers had a statement that went after the OECD's report went live, saying that they were working towards taming inflation, working on cost of living measures, but really didn't make any commentary at all about some of those very hot issues like the GST and also further cutting superannuation tax breaks.
We're at that time of year where we start talking about the mid-year budget update, MYEFO, in Canberra jargon. What can we expect?
Yeah, this is the mid-year economic and fiscal update, as you say, that Canberra jargon. We normally see it before Christmas. This morning, Treasurer Jim Chalmers says he'll be releasing that the week after next. Deloitte Access Economics has been looking at some of the budget numbers, crunching those budget numbers. They're seeing a projected surplus of $2.4 billion for 2023-2024. That's actually a bit of a revision, because in the most recent budget back in May, it was looking as though there was going to be a deficit. But Deloitte Access Economics is saying that after this, there will be a string of deficits, and there are some pretty big challenges given that Treasury coffers have been overflowing because of tax receipts from the commodities boom. But what happens when that ends? And Deloitte Access Economics are really starting to talk now about some of the challenging times ahead and the need for greater reform, which the Albanese government's been doing in those sort of bite-sized chunks rather than major reform, which is very, very difficult to get across the line.